Hi guys, hope you're doing great. Pretty sure most of you guys have asked yourself, what is this indicator? How do I use it? And how effective is it, right? So let us start with what it is and how do you find it. Okay, so you're going to go here, indicators, right? So you're going to click on indicators. As soon as you are on indicators, what you're going to do is you're going to look for ICT HTF candles, higher time frame candles, and as soon as you click that, this is what is going to appear, right? So as you can see, you have your 15-minute time frame, 1 hour time frame, 4 hours, 1 day, 1 week. So these are the settings that I use. All right, settings, and then going to click everything out, and then just going to leave the 4 hours and 1 day time frame, right? And then just going to change this to 1 candlestick, and then I'm going to change the chart colors to the primefx colors, my personal colors that I use. All right, so this is how it looks, right? So depending on what time frame I am on, for example, now I'm on the 1 minute time frame. On the 1 minute time frame, this is usually when I use the 4 hour candlestick, and then when I'm on like on a 15 to 30 minute time frame, this is when I use the 1 day, the daily candlestick, right? So for example, if I'm going to start my time frame, if I'm going to start my analysis on my 30-minute time frame, I know that I'm going to be utilizing the 1 day time frame. So I'll be taking the 4 hour time frame out like this, and this is what I'll be using. So this is how I use it, right? So we're going to go to a bit of theory work. Okay, so we're going to go to like theory work. So this is how I use it. So I use the indicator to help me use AMD. I hope that makes sense, right? I use the indicator to help me use AMD. So AMD is one of the strategies that I use that has helped me become a consistently profitable trader. I don't really care what they say. They might say that there are no holy grails and whatnot, but then like I believe that the strategy is a holy grail because like this is a very powerful strategy, right? So this is how it works. So in the market, we have 3 phases, right? These 3 phases are repeatable throughout the whole day, right? Although you should expect trades to be random, the market is not a random place. Everything is planned, right? So you'll have this phase. This phase is the first phase. It's called the accumulation phase. So this is where the market moves in sideways, right? This is where the market moves in sideways. No direction. It's not going up. It's not going down. It's just moving in sideways, right? And then this is where it's accumulating orders. One thing I can say about the accumulation phase, this is the worst place you want to find yourself. You don't want to ever place a trade while the market is accumulating, because imagine you have a buy here, profits, break even, profits, break even, profits. It makes holding the trade unbearable, right? And then if you ever sell here, profits, break even, profits, break even, it makes the trade unbearable. And then if you have any order in the middle, you do not want to be trading that, right? So after we have the accumulation phase, we'll have the manipulation phase, right? So the manipulation phase, this is when the market makers liquidate everybody. So depending on the market, on where the manipulation phase takes place, if it's taking place to the downside, this is where the manipulation phase is taking buy orders. This is where it's taking the orders of people that bought, right? And then after it takes these orders, this is usually like a very long candlestick. Takes the orders. After it takes the orders, then the market starts to distribute to the intended direction it wanted to go to. So vice versa for when it's trending down, and vice versa for when it's trending up, right? So this is where this candlestick comes into play. So just imagine that this is the 1 day candlestick, and this is how it's supposed to work, right? So I hope I hope this is easy for you to grasp and this makes sense, right? So this is what happens. So as I said, you'll have the accumulation phase, right? This is the first phase. Accumulation phase, market is moving sideways. And then manipulation phase, market creates the low of the day. After creating the low of the day, either you'll have some sort of demand zone right here where the market can tap in, and right away shoot up. So you'll have either a fair value gap, because as I say, if it's that long candlestick, so usually that long candlestick, it leaves a fair value gap in the middle or just a demand zone, right? So you'll have either a demand zone or a fair value gap on the lower time frame. On the lower time frame, if this is a 1 day candle, on the lower time frame, I mean like on the 5-minute time frame, you'll have that, and then that will be your entry, right? So vice versa for when the market is also trending down. So as I say, you will have your accumulation phase where the market accumulates, and then you'll have your FVG. If not FVG, you'll have your supply and demand zones, your supply zone waiting for you to enter, and then you'll be looking to trade to the downside, right? So let us go to the definitions. And if you're looking for this, so this is an ebook that we have, right? So this ebook is available. Just click on the link on the bio. You'll find this ebook. So accumulation, the accumulation of positions generally occur during the agent session. The accumulation is characterized by consolidation, agent session, but it may be the agent session. Manipulation phase usually occurs at the opening of the London session. Sometimes it can be New York open. This manipulation consists taking the price to opposite side of the true direction for the rest of the day. And then distribution occurs when the market makers liquidate, exit their positions, right? All right, guys, so we're going to do an example on the 1 minute time frame, right? So now that we are on the 1 minute time frame, so we are on the previous day, 10 o'clock. Let's just wait for 12 o'clock. Okay, yeah, 12 o'clock, new day, right? So let's just say it's 12 a.m. South African time. This is a new day. This is where did you open? Where was your market open? Your market open was here. All right, this is where your market open is, and then this is your recent high, right? And then this is your recent high. So basically, as you can see, yesterday's liquidity has been taken right over here, and then this is the recent high, and then this is the low. Okay, so we've marked that out. So everything within this range is considered accumulation, right? So the agent session and SA starts at 2 a.m. right? So we're going to wait for 2 a.m. right over here. So let's just mark out 2 a.m. So we're going to wait for 2 a.m. Okay, low, okay, low, and then high. So this is the accumulation phase. So the accumulation phase is usually from 2 a.m. to around 10 or 12 a.m. right? So as you can see, the market is accumulating, but then not exactly. So what do we have? We have a breakout to the downside, right? So that breakout, this is our manipulation phase, right? So why is this our manipulation phase? So if you were to move to perhaps the 30 or 1 hour time frame, 1 hour, let's just use the 30-minute time frame. If you were to move to the 30-minute time frame, right? If you were to move to the 30-minute time frame, you will see this long wick, right? So one way to characterize a manipulation phase, it's usually that long wick. If not that long wick, that long candlestick. So for example, this long wick right here, right? So it's usually that long wick. So let's go back to our 1 minute time frame. So you get what I'm saying? It's usually that long wick. So this is the manipulation phase, right? So let's look for where the manipulation phase is heading, right? So as you can see, we have a demand zone right over here, right? And we have another demand zone right over here. And for now, we have mitigated this demand zone, right? So usually the market makers, what they do is this, you'll find this, that this is inducement, this is a trap for beginner traders, right? They are looking maybe to enter off here, but then the market can respect this. As I say, the market is a random place. You can never be too sure about something, right? So now let us move. Okay, so we are respecting the demand zone, and as you can see, as I was saying, we then respect it. This is inducement, and prices now tapped into our new demand zone, and this is where we're looking to enter. So we're looking to take profit at the old high, right? We are looking to take profit at the high that the market created, right? We are looking to take profit at the Asian high and liquidate at the Asian high. So this is our Asian high, right? So now we have our manipulation phase, right? So this is our manipulation phase. We had our accumulation manipulation phase. So right now what we are waiting for currently is we are waiting for the distribution phase. So what we are waiting for right now is we are waiting for the distribution phase, right? So the distribution phase is we have to wait for confirmation, right? So confirmation is we tapped into our demand zone, and yeah, so that's our confirmation, tapped into our demand zone. So we are looking to go to the upside. So we are looking for this, right? So let's see how the market plays. All right, and just like that, we have our TP hit, right? So basically this is how AMD works. Thank you for having me, and thank you for watching. So thank you for watching our YouTube channel. Please make sure that you click that like button, subscribe, comment, ask me any questions, and I'll be here, I'll be available to answer them. Thank you and have a great one, guys.